In this video, we'll be talking about how to approach trading. People have strategies and systems in place or whatever, but they don't have an actual approach to the markets, right? This is basically what I'm trying to talk about in this video. So before I talk about like trading plans or whatnot, I want to tell you guys what you're actually sharpening, right? So I want to use this analogy of an axe, right? Basically, this is a three-edge axe that has three edges on it, right? You have to sharpen all three edges, right? So basically, the axe, number one or two things, right? You have to sharpen your axe and you have to know how to swing the axe. That's basically what we're doing in trading, right? And it applies to anything if you want to look further, if whatever you're doing, right? But for example, right, with trading, there is your edge, your risk management, and your strategy. These are three things I always talk about, and I want to talk about how you can sharpen these edges and what you basically how to basically just sharpen it, just in general with that. And after I explain that, I will go into more of okay, how do you swing that axe every day when you show up into the markets? What are you doing every single day? What are you looking for? What is the three things that are in your head, or what are the things that are in your head when focusing on executing your day-to-day trading journey, right? Which is like executing may mean not executing, but let's get back to the point with let's start off with edge, right? So the first thing you need is your edge, basically your strategy, the way you look at the markets, basically what you're looking for, right? This is the first thing that you need to start off with whenever you are approaching trading. And this goes for beginners or advanced, doesn't matter what it is, right? Your edge, your strategy, your defined strategy, right? Which is what you're looking for in the markets, right? So what am I looking for in the markets? I've got this shit put up right now. Are you looking for highs? Are you looking for lows? Actually, even past further that, you are looking, are you trading technical analysis, or are you trading fundamental analysis where you're looking at news, you're looking at data of the markets and stuff like that, and news or whatnot, right? But for me and a lot of other guys who day trade, we use technical analysis, right? So are you looking for highs? Are you looking for lows? Like, how are you getting into the markets? Where are your stop losses? Where is your TP? How long are you holding your trades for? These all ties back into your edge. Basically, is your strategy. So that's one edge of the sword of the axe, right? Risk management, second one, right? Basically, risk management is how to prevent yourself from blowing up into scale, basically, right? So if I can briefly explain this, your risk management is basically okay. This ties back into your edge. So if you win a lot, then you should risk a lot more, right? So basically, your risk management, how much you're risking, you're basically betting on yourself, how good of a trader you are, right? So if, say for example, right, you have a lot of losses, right, but your wins, say for example, your wins, you have a high RR, right? Which where instead of like risking $1 to make $2 or $3, right, you're risking $1 to make like $5, $6, $7, right? With that, your risk management, or how much you should be risking of the percent you're risking for your account, should be a lot lower than someone like that has a high win rate. They should risk a lot more, probably like 10%. I risk usually around 10-20%, depending on the account, or not the account, the trade setup and everything that goes into understanding an A plus setup, right? So that is what risk management is. And when it comes to that too, also with risk management, you want to risk about, say you're risking like 10% a trade, right? So I have a $10,000 account, and I'm risking $1,000 a trade, right? If I lose that trade, say for example, I lose that trade, first trade of the account, I'm down $9,000, right? I still risk $1,000 that second trade, even though I'm in drawdown of my account, right? Because I don't want to risk 10% again, because 10% of 9,000 is 900. Now you're lowering your risk. So when you're losing on the losing streak, you want to keep your risk the same. However, when you win, say the first trade you win, you hit like a 1 or 2 RR. Now your account is up maybe 12,000, right? So you're up 12,000. Now I'll risk 10% of 12,000. That is basically how you structure your risk management when you are scaling. So basically, if I risk 10% and I'm winning, right? When I'm winning, I'm risking 10% of my balance still. So the risk will increase naturally, right? If I start a losing streak, or if I lose, I'm gonna risk the same amount that I did last trade. That's basically my risk management strategy, and you can implement this into your own plan when you approach trading, right? So the third thing is consistency. Consistency goes back into psychology. That's the third edge of the sword, right? Basically, psychology, right? is I guess I can say that is you swinging the axe basically, right? So your psychology is um how you're showing up every single day. What are your mindsets that going in? What rules do you have set in place for you to be consistent? Because when you hop into the markets, for example, right, to force a trade or to force an entry, right, those things are out of the picture of what you should be doing. You have a plan, you have your edge, you have your rules, right? You need to follow these rules, and that goes back to the psychology where even if you do enter a trade, right, you have your rules. I need to put my stop loss here, I need to put my TP here, right? And when you do that, you can have different rules. So some people scale in, some people have multiple take profits, some people move their stop losses to break even. Whatever rule you have that goes back and relates to your edge and that you understand how the market moves, that's how you should do it. And you should be structured and disciplined with that approach when you're trading or when you're looking for a trade or when you are in a trade or even after a trade, right? Those three things, right, ties back into psychology and staying consistent no matter what. Like your wins, don't celebrate your wins. Your losses, don't celebrate. Don't dwell on them losses. That's all, what I always say about trading, and that is very psychology heavy, right? So, hold on, I took some notes right here. Let me read them real quick. Sharpening your edge, sharpening risk, sharpening psychology, right? So basically, when you're sharpening your edge, right? So basically what you're trying to do is you want to be more precise, you want to be more clear, you want to have it be very simple for you to understand. So with an edge, you need to get to a point where you can explain your edge to someone else for them to understand. That's how you know that you have a good edge, right? And it's not about adding more. So you don't want to go down. Of course things help, like indicators and whatnot and all these different stuff, right? And that is cool, right? That can be part of your edge too. But when you're sharpening your edge, you don't want to add more. That's not the focus. You want to make it more. You want to basically build off of that. So next point is sharpening risk, right? So your risk, you want to determine. You want to be very precise with your limits and how you are going to be approaching the markets with your risk. So let me put this into an example. Sharpening your risk. So decided limits before trading. Okay, so let me think. Damn, I got brain fog. So with sharpening your risk, you want to understand, okay, say you go into the market, so you want to risk 10%, right? But you realize that you're risking too much because you have more losses than whatever, right? You have more losses. So if I'm risking 10% a trade, I have to lose 10 trades in a row in order to blow my account. That's basically the idea behind it. And you need to find that sweet spot with your risk. So how much you're risking, what's your risk plan? So like what I was explaining to you earlier about risk, like risk management, my risk is always, it's very dynamic. So it's like if I lose, I'm gonna risk the same amount. If I win, I'm gonna risk the percentage amount of the balance. That's basically how I'm approaching it. So another thing too is stop losses, right? So stop losses are very important with risk management. That's what risk management really is stop losses, cutting your stop losses or cutting your losers short. So basically, if you want to understand what you're risking, right, and where to place your stop loss, you place your stop loss where it's gonna hit, or I said it wrong. You place your stop losses where when price goes in that direction and it breaks past a certain level, you get out because basically the market's telling you that you're wrong in the trade. Say it's breaking structure upwards. If you're in a sell and it's breaking structure upwards on the or breaking above resistance, you get out. That's basically risk. Sharpening psychology. So that's basically you just building discipline and sticking to your rules no matter what. Like what I say, don't dwell on your losses, don't celebrate your wins. Goes back to psychology, where it's like no matter what, you're gonna be consistent. And after that, you learn and you say, oh shit, like I took out too early or my stop losses wasn't right. That's a psychology. When you basically fix that, you're fixing a rule, not your behaviors, or you're not reacting to shit. That's the biggest difference. It's like you want to be very clear with what you're building and what skill are you sharpening, right? So that goes into that. And TP, same with TP. Like when you go down to TP, right, is running and hits a TP, you don't want to hold because if you didn't plan this before, So if you plan to move your stop, or you put your TP right here at this level, right? If it hits it, take out. Don't be greedy, and don't try to extend it more, or try to divert from your initial plan that you hopped into the markets with, or hopped into that specifically that trade that you hit, right? So another concept that I wrote here is most people swing a dull axe and wonder why nothing's cutting, right? So you can come in the markets and swing all you want, but it's like your edge is fucked up. Your risk might be good, your risk management might be good, but your edge is fucked up. Like you don't have your strategy isn't really doing its thing, or you're not analyzing the markets. There now sharpen the axe. So that's basically what that everything. So I've just basically explained how to sharpen the axe. So next point, which is yeah, hold on. So this is exactly what I realized recently, right? Starting to lock in with trading a lot more, which is that trading is very simple. A lot of people make it very, very complicated by talking about strategies or whatever. You talk about all the strategies and everything. Yes, all strategies work at the end of the day, but it's like you need to have the bigger picture in mind, and that is the foundation of where your skill is being built up upon, which is the three things, right? Edge, risk management, and psychology, right? You must have all those things in order for you to progress in trading. So, how to swing the axe, right? So trading, like when you establish your psychology, trading starts to become boring, and this is a very good sign. Like when trading becomes boring, that means that your emotions are not as strong as they used to be, because back then, when you place a trade, or even when you first start, you place a trade, and you're like you're like stressing, because it's like, okay, is in profit, draw down, profit, draw down. It's like, you must remain uh what do you call it, disciplined with your plan, which is to enter here, you put stop loss here, you put TP here. So basically it just becomes very clear what you need to do, right? So some days you don't trade, right? This is the biggest thing that I've learned with day trading, which is you're looking at the markets every single day, right? Some days you will not find no positions depending on your strategy. Of course, if you're trading on a lower time frame, you will find more opportunities than if someone was swing trading, which is basically what I do. I swing trade a little bit more than I intraday trade, which is holding the trade for longer than a day. You feel me? So just understand that, like, defeating FOMO is like what I tell myself when I go into the markets every time is I'm not going to place a trade today. If there's something that's so clear and so obvious to me, I will take that trade. That's basically what I learned. So I haven't took, if I can tell you, I have not taken a trade this whole entire year, 2026, because I'm waiting for my setup. I saw, like I said, there's a lot of trades that I've missed, but they're not trades where it's like I'm not willing to risk my money yet. So with this trade, I kind of hesitated. I know my fault, which is I hesitated. I was like, oh, price might pull back a little bit more up to these levels right here, but nah, price eventually ran on Bitcoin, and I predicted that, not predicted, but I analyzed that price will run to $50,000. Since if I can do a little breakdown, as you can see, if you go on a monthly time frame, you want to look at the cycles of the markets and whatnot, or especially Bitcoin, the way it moves, right? So the first dump it had back in 2017, right? The first dump was, where is it? It dumped 80%, as you can see, 80%. Now the second bullish run ran up to all the way to like 70,000, right? Where it dumped to, which is I think it dumped to 75%, around there, right? So it dumped 75%, right? And now third phase, or third cycle. Third cycle just ran, hit all-time highs, $125,000, right? How much is gonna dump? I'm predicting and I'm analyzing that it would dump around 70%. But looking at the markets, the structure being built now, so there is places that it can react off of, which is, I put a level at 50,000, which is around here. You see this level of support where there was a lot of buyers in this area, and just the selling. And here, let me show you. Yeah, 70%. It could drop down to 30, 40,000, but I say 50,000 is a good area to sell to, and that was my setup for this trade. But anyways, hope your boys learning a lot, bro. Yeah, so basically, going on to my next point, which is how to swing your axe. The next point. So, uh, yeah, I basically explained all this. So your job is basically execution, right? You're not trying to force an execution. When you swing the axe, you must swing it with intention and with a plan, and it must be very, it's just all of it goes back to precision, right? So that is your focus for day trading. It's not about forcing a trade. Oh, I could have made money here, I could have made money there. Okay, it's cool. You see opportunities, now learn from that and see how you can you repeat that repeat that. I just had a brain fart. Repeat that setup. That's the word. So just to wrap up this video, just want to let you boys know that don't chase strategies. You need to build an approach. Of course, you're sharpening your axe by sharpening your edge, sharpening your risk management, making your risk management better, making your psychology better, of course. But you have to know how to approach the markets, right? So it's like the reason why trading is so hard, because there's so much noise and so much things to learn. You feel me? But it's like you have to make it very simple. Trading is extremely simple. All you're looking at is price. That's all you're looking at. And how do you trade this, right? How do you trade it? Edge. What do you look for? You risk, how much you're risking, and your discipline, psychology. That's it. That's all trading. That's all you need to look at when you are trading and when you're learning how to trade. It's like wherever you at, it doesn't matter, because it's like you must have your foundation. You must have your foundation. Oh shit. You must have your foundation strong, bro. Like that's what I realized. Like you can find a good ass strategy. Like oh, what's the best strategy to use? It's like of course you need to find a strategy that works for you and all, but it's like at the end of the day, you must know how to execute that strategy. You feel me? So that's why it goes back into how to swing that axe, how to show up and execute every single day in the markets, right? So the reason why trading, this is a line of last idea topics I want to talk about is it's not hard. Trading isn't hard. You make it hard by not having structure. If you have structure, everything will play out right, because in the markets nobody's telling you where to buy, where to sell. You are. So you need to have rules set in place for yourself in order to not tip over that edge and to fucking blow your account. You feel me? Do some dumb stuff, revenge trading, all that, all these little stuff. Is very basic information, but there's something more basic than that, which is the fundamentals and the foundation, the principles of trading, and how to really succeed at it, right? So yeah, that's the difference between hoping and praying and actually trading, and actually you know what you're doing. If you lose a trade, you go and review your trade, journal, do your due diligence. If you win a trade, you do due diligence, you sharpen the axe, and you get better at swinging it. That's all it is. You're not guessing. When you hop in the markets, if you're ever guessing or hoping, oh, I hope price will go down to my TP level, you're not doing it right, because you shouldn't even think about those stuff in the first place, right? So that's basically all it is. Yeah, I think I covered everything I need to do. And yeah, boys, remember, always, always, always keep the canvas of the artwork that you're doing, which is to improve that skill of trading. Keep it very clean, right? You don't want to pick up too many things at once, because people do that a lot, including, I used to do that back then, where it's like more is better. With trading, that is not the case, because with trading, right, you are basically fighting, or it's a war between buyers and sellers. That's all it is. You're trading emotions and feelings in the markets. Like you're basically trading millions of other people moving trillions of dollars in the markets, right? And understanding where buyers are, where sellers are, and just where can you position yourself in the market in order to make money. That's all trading is. It's very simple. Just buying and selling and understanding like what I just said. So that's basically it. Any final thoughts? Yeah, bro. lock in, bro. Um, remember to keep remember to keep this idea in mind: is to build the ground from the house from the to build the house from the ground up. It's not about you go in here and you worry about, what broker should I use, or uh what none of that really, is what you need to be worrying about in the beginning. You need to be worrying about, which pair am I gonna trade, and when you pick a trade, or when you pick a pair, stick to that one pair and start analyzing the markets. Build your edge. After you build your edge, build your risk management, and psychology is the umbrella that caps everything. So that's basically your approach to the markets and swinging the axe. But yeah, that's basically it. That's all I need to say. I'm not gonna yap any longer. 20-minute video. I hope your boys got some sauce. Make sure you take notes. Make sure you don't give up on this shit, because this shit is very beautiful. Like, trading was literally my master. It taught me so much things, and it will teach you about life, because it's just you against yourself. The more you know about yourself, the better you will be in trading. Like, so that's all it is: understanding your emotions, understanding what makes sense to you, understanding, your risk. Does it make sense to you? Does my edge make sense to my risk that I'm putting on this trade? And does your skill make sense, or does your risk make sense when it comes to your skill? Because all trading is you're just betting on your skill as a trader. The more better you are at trading, the more you can risk. That's basically all. So yeah, boys, fuck that 1% rule. Find what rule works for you. That's all it is. I'm gonna leave it with that.